So I always like to say that understanding the cash flow tables is the key to understanding exactly what's happening and why in a financial plan. So if you're a bit newer to RightCapital, this is going to be a great opportunity for you to learn more about our cash flows and to start getting comfortable with, finding the information that you're looking for within the different tabs and tables. And, for those of you who are maybe more experienced RightCapital users, we're also going to be taking a look at some new functionality today when it comes to generating cash flow reports, in addition to some cash flow settings and features that can help take things to the next level in your presentations and in your analysis. So there's a little something in here for everyone today, and I'm really excited to dive into this with all of you. Taking a quick look at our agenda, we're going to start with a quick review. There we go. We're going to start with a quick review of the cash flows in a RightCapital plan. So we're going to be looking at all the different cash flow tabs and tables, as well as some of the key features to be mindful of. We'll then talk a little bit more about the cash flow maps in particular and how you can best leverage those with your clients. Then we're going to dive a little bit deeper into how you can utilize return scenarios in your cash flows, as well as other settings that have an impact on the cash flows that you'll want to make sure you're aware of. And lastly, we're going to take a look at customizing cash flow reports and some of the new options that you have there as well. So lots of content for us to get to cover here today. So one last thing I want to mention before I dive in is that these webinars are interactive. So if you have any questions as we're making our way through things today, please feel free to ask using the questions field in the GoToWebinar control panel. I've got about 40 to 45 minutes of prepared content for you today, and then we're going to be doing a live Q&A until the top of the hour. So I'll be sticking around to answer as many questions as I can. Perfect. I'm just going to take a quick moment to switch over to my RightCapital login here, and we can get started. Perfect. So here we have our case study for today. We're going to be looking at Winston and Julia Smith, and I'm just going to quickly take us through the blueprint section in the profile just to get us acquainted with these clients. So clicking into the profile section and then again into the blueprint, we can take a look at the high-level information in our plan here. So starting with the net worth tab, we can see that these clients have about 1.5 million in the way of overall net worth. Winston and Julia are both in their early 50s here, and they also have a 14-year-old son named George. Looking at the goals timeline quickly, we can see that we have a college goal here for George in the late 2020s and early 2030s. Currently, the target for retirement for Winston and Julia is age 65. So we can see Winston, retiring here in 2035, and then Julia retiring in 2037. We can also see the monthly expenses in retirement, as well as the healthcare costs kicking in. And then in the years after they both retire, we also have a vacation goal here. So these clients have a goal to do some traveling in the years after they both retire here. So we'll be traveling for a few years. And then in 2042, we have a primary home relocation occurring. So after they're done traveling, these clients are planning to sell their current primary home and relocate to a new home in Florida. So we have that occurring in 2042. And then at the very end here, we have our long-term care costs kicking in for both Winston and Julia in the final 2 years of both of their lives. And then just a real quick look at the income, savings, and expenses here. We can see that Winston is currently making $100,000 a year. Julia's earning $80,000. Winston's also expecting an annual pension equal to $25,000 a year, starting in the year that he retires. We can also see that these clients are both currently contributing to a Roth IRA and a 401k respectively. And in terms of expenses, they're spending around $6,000 a month. So just wanted to quickly go over the blueprint with all of you here so that we can start to get a general understanding of what we're working with in this plan. And now that we've covered that, I'm going to click into our retirement section and then click into our cash flows. Perfect. So here we are in the retirement cash flow module here. I do want to quickly just mention that the cash flow maps are technically the default landing page in the cash flows. So unless you've swapped the order around here, the maps are the first thing that you'll see on this page. I do know that a lot of advisors prefer to have the summary tab appear first here, and we are going to start by going over the summary tab today. But I do just want to take a quick moment and show all of you how you can rearrange the order of these cash flow tabs if that's something that you'd like to do. So just to quickly point out how you might do that, I'm going to click back into the advisor portal here. I'm going to find Winston and Julia in my client list here, and then I'm going to click into the Planning Access tab. So within the Planning Access checklist here, this is where you can determine the order of those tabs in RightCapital. So if you were looking to rearrange the cash flow tabs in particular, you can click into the cash flows area under retirement here, and you'll find a window where you can rearrange the order of these tabs. So all I did was take the maps, which will be at the top by default, drag that to the bottom of our list here, and then click done. And then I would have clicked save to lock that in place. So if you were to do that on your end, once you reopen the client plan here and click back into the cash flows, you'll see the summary tab as the first page that we see here, and then the maps at the end. Perfect. So we are going to take a few minutes here to review what we can find across all of the different cash flow tables here, starting with the summary tab. So, generally speaking, this is where we can see all of the cash inflows and cash outflows for each year of our client plan. So if I scroll all the way down to the bottom here, we can see that this extends all the way through both of our clients' planning horizons out to 2062 here. So generally, this is where we can start to get a sense of our clients' net flows in a plan. So this is going to take all of their inflows in a given year, subtract out all of their outflows, and then whatever we have left over or whatever we need to fully fund our outflows, we'll find that on the right-hand side here. So whenever you see a negative number in parentheses like this in the net flows column, that's RightCapital telling you that their outflows in that particular year outweigh their inflows, and that we're going to need to dip into the client's assets to fund that shortfall. In a year where they have surplus income, which should be in 2042 here, the year of that primary home relocation, we can see that these clients are positive, about 300,000. And when we see a positive number in the net flows column here, that's money that's being saved and reinvested into the client's taxable investments. So those are the two things you'll see in the net flows column here, pulling money out of our accounts to fund cash flow deficits, and then money that's being saved and reinvested into the taxable investments. This other column here, the spend unsaved cash flows column, this is something that you may or may not see depending on a very particular setting, and it is a setting that we'll go over in a little bit here, but generally speaking, this spend unsaved cash flows column is representing extra income, so surplus, that is being spent off in the plan. So, rather than money that's being reinvested, like we see here in 2042, these clients also have some surplus income later in life that currently is being spent off. So that's what's represented here by this unsaved cash flows column. Something I want to highlight with the summary tab, but this is also true for all of our cash flow tabs in RightCapital. Whenever you see a column with an underlined header, that indicates that you can click into that column to sort of zoom in and view more specific details when it comes to what exactly makes up that figure. So if I zoom into our income inflows column here, for example, we can see a breakdown of all of the different income inflows in our plan. And if I wanted to zoom in a little bit on salary, for instance, I can see the breakdown of Winston's salary and Julia's salary as well. So this really comes in handy when you're looking to break down expenses, especially if you have clients who are a little bit more granular when it comes to budgeting and they're breaking out separate expenses and things of that nature. We can really start to break things down here in terms of our living expenses, housing, debt expenses, insurance premiums. If you did want to zoom into any of these columns, you can do so as well. So maybe you want to zoom into housing, for instance. We can see an even more detailed breakdown of our mortgage principal and interest, our property taxes, insurance, etc. So lots of great information to be found here in the cash flow summary. Whenever you're zooming into columns like this, if you ever need to get back to the page you were just looking at, or back to the main summary page, there is a little navigation menu at the top of the table here. So I'm just going to click back into the summary part of this to take me back to the main summary page. So that's your best way to navigate around when you're zooming in and out of columns in the cash flows. The last thing that I want to mention with the cash flows summary is that once you start to get comfortable with this page, it really starts to tell a story of what this client's plan is looking like mapped out into the future. So we can, as we scroll down the cash flows here, we can see when George's education goals are kicking in here in 2028. We can start to see when these clients retire, we can see their salary dropping off here. We can see their travel goals kicking in 2037 in this joint vacation column here. We can see in 2042 that primary home relocation occurring. We can see the inflow from the sale of their current primary residence, and then the 900,000 or so that they're going to be putting down for that home in Florida. And then we can see our RMDs kicking in a bit later in life in our planned distribution column here. And in addition to at the very end of the plan, we see our long-term care expenses kicking in addition to some long-term care insurance in this plan that's offsetting some of those expenses. So this cash flow summary page is really the best place that's going to map out everything that's happening over the entire course of the future-looking projections in RightCapital. Perfect. So moving on to the net worth tab here. This is the next cash flow tab we're going to be looking at today. And this is going to show us a lot of really important balances and values over the course of the plan. So, of course, we can see the breakdown of non-qualified and qualified assets and those end-of-year balances over the course of our plan. We can also see property value here. So if you do have a client who owns multiple properties and you want to see each of those, the values listed out separately, this column here, primary and vacation homes, is where you'll see those. In this case, we've got our primary home and then eventually that Florida property that we're purchasing later on in the plan. There's also a separate column for investment properties. So if your client has multiple investment properties, you can track the balances of those here. For clients who might be business owners or for clients who might have trust assets, we can track those values here in the net worth section. And then, of course, our mortgage balances and other loan balances can also be tracked here. So if they want to zoom in on their mortgages and get a sense of how those are being paid down over the course of the plan, we can find that here. And then it looks like we also have an other small loan here, a car loan for Winston that we can also see being paid down within the first few years. Perfect. So the third cash flow tab we're looking at here is going to be the invested asset tab. And this page is focused in more specifically on the client's portfolio. So we're really zeroing in on the client's investments here. And this is where we can start to find things like our planned savings each year. So we can zoom into this column to see Julia's contributions to her 401k, as well as Winston's contribution to his Roth IRA. We can also find employer matches here in the invested asset section. So in this case, we can zero in on that employer match for Julia's 401k here. This is also where we can see our plan distributions and net cash flows here. So a little bit of overlap with some of the information we see in the summary, but importantly, this is also where we can find the portfolio return in the cash flows in RightCapital. So we can track the growth on the client's portfolio over the course of their retirement projections as well here. And at the end of the day, we can take a look at their ending balance each year for their investment portfolio, not including real estate and some of the other assets we would find in the net worth section here. So we're really just looking at their investments in particular. And then the other tab that we're going to be looking at here is the accounts tab. And this is really the best place to see all of the end of year balances for the different accounts and account buckets in the client plan. So in our taxable column, this is where we can find the breakdown of their cash versus taxable investments as those are being projected out into the future here. We can take a look at the individual accounts in the plan by zooming into these specific buckets. We can see Julia's 401k, as well as Winston's traditional IRA and Roth IRA in this plan. So we can track all of those ending balances here. And then, in addition to the ending balances, we also have the ability to take a look at several other, important things here using this drop-down menu at the top of the table. So, in addition to those ending balances, we can also start to take a look at things like the additions that we're making to all of our different accounts. So we can see our contributions to the different account buckets here. We can see RMDs specifically when those kick in and what's being pulled from each account bucket, any other withdrawals that might be occurring as a result of cash flow needs in our plan, and then our net cash flows where we can see everything together essentially. So all of our additions, all of our withdrawals and RMDs. Something I want to make sure that I mention with the net cash flows here in particular is that this is also the best place to see money moving around between different accounts within the plan as well. So, a good example of that would be something like Roth conversions. And I do have a quick Roth conversion proposal that I can implement here just to show us all what that might look like. So, if you are finding yourself modeling Roth conversions in a plan and you want to see where that's happening in the cash flow projections. Once you have that Roth conversion strategy implemented, the cash flows accounts tab is the best place to see that. So if that was something you were looking for, the net cash flows filter specifically in the accounts tab is where we can see. I believe in this case we have some conversions happening in Winston's early 70s here. So we can see money being pulled from the tax deferred accounts here, pro rata from the 401k and IRA, and entering the Roth IRA bucket in the same year. So we can track that movement of money from those conversions between account buckets within the accounts tab as well. Perfect. I'm just going to turn that Roth conversion proposal off quickly, and then we can dive into our cash flow maps tab here. Perfect. So the last section of the cash flows that we're going to be taking a look at here today is the Maps tab. And unlike the rest of our cash flow tabs here, this page is unique in that it adds a visual component to our cash flows. So the information that we see in these charts is going to mirror what we see back in the Summary tab. So we've got our cash inflows on the left-hand side here, our cash outflows on the right-hand side, and then our net cash flows at the bottom. And this is a page that's really designed more with clients in mind, especially those clients who might struggle a bit to understand what they're looking at with some of these cash flow tables and spreadsheets. So there are actually two different visuals that we can toggle between here. But what we have first is the waterfall chart, which is also known as a Sankey diagram. And what this chart really excels at is sort of visually demonstrating the relationship between two sets of complex values from the flow of one set of values to another. And in our case, of course, those values are the client's cash inflows and cash outflows for each individual year of our plan. So there's a timeline at the top of the maps chart here where you can isolate which specific year we'd like to take a look at. So, if you scroll through this timeline here, it will automatically highlight the years in which the clients retire. So that's a nice quality of life feature for you if you're looking to hone in on one of those years. And ultimately, we can see all of the money entering our plan, all of our money leaving our plan, and exactly where it's going each year. So, the cash inflows and outflows visually are proportional to the dollar amount. So that's going to make it very visually apparent, where most of our money is coming from and also where it's going, which makes this particular cash flows tab, a really great way to, spot excess cash and, negative net flows. It's going to make those two things very, very obvious for your clients. So, if we take a look at maybe one of the years where we have George, in college here, we can really see visually that they are not earning enough to cover all of their expenses, goals, taxes, and savings, in 2029, for example. So we can, look at the client and say with confidence, like you're going to need an extra $50,000 in this year that you don't have. So this can be a really useful way to help facilitate those conversations of where is this money going to come from? Are we going to dip into our accounts? Are we going to potentially talk about reducing expenses or redirecting some of our savings? So, this is just a helpful way to make that visually apparent to clients and facilitate those conversations when it comes to, cash flow excess and negative net flows in particular. I also do want to take a quick look at a year like 2042, which in this plan is when we have that primary home relocation occurring. So that, of course, is a very important year in this particular client plan. So if you were looking to hone in on the cash flows for a year like that, and get a sense of what things are looking like, this is a good example of that. We can see a large inflow here, which is, of course, the proceeds from the sale of that primary home. We can see that we are purchasing that new property as well, but there's also a pretty large positive net flow here that's being saved and reinvested in this particular year. So again, a great way to hone in on specific years and just, further those conversations with your clients. The last thing that I want to mention about the waterfall in particular is that, if you do have clients that are doing some of their own data entry, this can be a really great way to sort of spot check those inputs and just identify if those numbers are accurate. So, if you do have a client who maybe adds an extra zero to an income amount, for example, or, maybe they have an idea of what they spend, but they plug in the numbers and maybe it's not quite realistic. This cash flow maps area is going to make that really obvious. So if your client is looking at this chart and they see that they've got an extra $10,000 or $20,000 a year, maybe that's a good indicator of, maybe the client might look at you and say something like, I definitely don't have an extra $10,000 or $20,000 left over at the end of each year. So this can be a great way to sort of spot check those inputs and just make sure that all of those data entry pieces are correct in the plan. Perfect. I do have a quick question for all of you. I have a comment that just came in that there's some issues with the audio. So if you can hear me, if you could just mention that, if you could leave a quick note in the questions field, just confirming whether or not you can hear me, I would really appreciate it before I move on to the next section here. Okay, perfect. It sounds like most of you can hear me perfectly fine. I appreciate that a lot, everyone. Perfect. If there are any issues with the audio, please let me know and I can take a moment to fix those. The next chart that we have available in the Maps tab here is the breakdown chart. And this is really a sort of alternative visual representation of the summary tab that's, A, a little bit more interactive than the waterfall, but B, also a little bit more in line with other RightCapital visuals. So generally, the information that we see here is the same as that waterfall Sankey chart, but some advisors do prefer this view, so it is here for you if you'd like. The main feature that this area has that the waterfall page does not is that you can click into individual tiles here to see that breakdown like you might do back in the summary page. So if you didn't want to zoom in on living expenses or housing expenses, for example, you can click into those boxes and sort of break those out very easily using the breakdown chart. So that can be a helpful way to just get a little more granularity while still maintaining some of the clarity that the visuals provide over the cash flow spreadsheets. In case I haven't mentioned it yet, whenever you're in the cash flows taking a look at any of these tabs, you can toggle between certain plans using this little drop-down menu in the upper right corner of each module or each tab here. So, if you are working with multiple plans and you want to compare and contrast certain information in your cash flows, you can very quickly and easily switch back and forth between your current plan and your proposed plan, or if you've set up different comparisons, you'll find a list here of every plan that you've created in that client household. So you can very easily compare specific tables and specific years by switching around between different plans here. Perfect. So that does cover it for our review of the cash flows in RightCapital. So the next thing that we're going to spend some time talking about today are settings, specifically settings that have an impact on our cash flows here. So, if you've been with RightCapital for a while, this should be a good review for you. And if you're newer to RightCapital, I definitely recommend making a mental note of each of the settings that I'm about to touch on here. Some of these settings are more of a visual change, but some of these settings are going to have a pretty significant impact on how RightCapital calculates things and on the output of your client plans as well. So I do want to quickly mention before I dive into this that this webinar is being recorded and it will be posted on our Help Center shortly after the presentation ends today. So if you do want to watch this back at any point in the future and maybe double check some of your own settings, I'll show you where you can find the recording before we dive into the Q&A in just a bit here. That being said, we are going to be navigating to the settings here within this plan. So I'm going to click into the gear icon in the upper right corner and then go to the settings tab. I'm actually going to open the cash flows in a separate tab here, so I don't have to do quite as much clicking around. So let me just get that open and ready to go here. Perfect. And then we're going to be mainly focused on the methodology tab of our settings page here. So first, we're going to touch on what I like to call the big three calculation options here that are going to have a pretty significant impact, not just on the cash flows themselves, but on the entire client plan and retirement projections. So the first of those is the planning method setting here, which is the very first setting listed on this methodology page. And I'm currently using a modified cash flow based planning method. The other option that's similar would be cash flow based as a planning method. So I'll just quickly explain what each of these do and what the differences are. Modified cash flow based, the main thing to keep in mind with this option is that when it comes to excess cash flows, so if a client's earning more than they're spending in a given year, it's going to automatically assume that all of our excess cash flows are being spent off. So this is the setting that I mentioned a bit earlier as it relates specifically to this spend unsaved cash flows column. So that is what we see happening here in this plan. These clients have some excess income during their RMD years that we are assuming by default to be spent off. So that is what the modified cash flow planning method is going to do for you. The other option that is similar but different in a key way would be the cash flow based planning method. And the main difference here is that instead of assuming we're spending surplus cash flows, we're going to instead assume that we're saving and reinvesting all of our excess into the client's taxable investments. So if I lock in that change and then refresh our cash flows here, we should see the spend unsaved cash flows column completely disappear from our summary page. So, if you were following along with me earlier and you weren't seeing that column, chances are you're using a cash flow based planning method. So instead of assuming that we're spending all of that excess, we now have that being saved and reinvested automatically. So that's going to be the main difference between cash flow based and modified cash flow based as it relates to the cash flows. There is also an option for goals-based planning here. This is different than the cash flow-based methods in that it's going to crunch the numbers a little bit differently in RightCapital, and it requires less information to be entered upfront in a plan. So it's a great way to put together a very quick plan for a client. And this is also going to have an impact on our cash flows. So just to show you what that looks like, when we're operating on a goals-based planning method, we have less information in our cash flows to work with. We're not really focused in on specific income and expense information. We're not going to see those year-to-year cash flows, but we will still have the net worth tab where we can track all of our important balances over the course of the plan, and then the accounts tab where we can zero in more on those specific account buckets and take a look at the movement of money here as well. So you won't have quite as many tabs available to you if you are putting together a goals-based plan in RightCapital. Perfect. So the next setting that we're going to look at here that again is going to have a significant impact, not just on the cash flows, but on the plan as a whole, is going to be the withdrawal sequence here. So this is another setting that again is going to be important in those years where we have negative net flows in particular. So this specifically determines the the order of operations, the order of accounts that we're going to withdraw money from in those years when they need to make up for a cash flow deficit. So the default withdrawal sequence in RightCapital is going to be taxable, tax deferred, tax free. So if I click back into the retirement cash flows, I just refresh this page quickly. And then if we look at that accounts tab again and take a look at those withdrawals, we can see that our negative net flows for the most part are being covered with our taxable assets. And that's because of our withdrawal sequence. We have that listed first here. So the system is going to do its best to fund their negative net flows with taxable assets first, and it will only move on to those tax-deferred assets and tax-free assets once the taxable bucket is completely depleted. So do keep in mind that if you are using a different withdrawal sequence in RightCapital, maybe we have it set to pull from the tax-deferred bucket first and then the taxable bucket, that's going to impact what we see here on this accounts tab. So if I refresh my page, we should see, rather than dipping into that taxable bucket here, let's see here, back to the current plan. Let's see. Okay, I have it set to spend their cash first in this plan. But if we were wanting it to pull from the tax-deferred assets first rather than the taxable assets, that's where that withdrawal sequence is going to come into play, and we should be able to see that reflected in the cash flows as well. So just be mindful if the accounts tab is showing you a different order of operations than what you're looking for in a plan, make sure you're double checking that withdrawal sequence here. Perfect. And the other setting that I want to make sure that I touch on, and the other one of the sort of big three, as I like to say, is going to be the cash flow in simulation starts setting. So this one, again, very big impact on our cash flows. This one is going to specifically determine when our cash flow projections begin in the plan. So I currently have this set to January 1st of this year. So if we take a look at our cash flows, we can see that the start date is 2024. So our projections are starting on January 1st, 2024, and being projected out from there. But there is an option here to start on January 1st of the next year. So if I lock that setting in place and then refresh the cash flows here, we should see now that the cash flows are starting in 2025 instead of in 2024. So this is an important setting to be mindful of depending on the time of year it is, whenever you're revisiting this plan with your client. For the most part, many advisors will stick with the January 1st of this year setting in the earlier half of the year. And then, as it gets close to the end of a particular calendar year, sometimes it may make more sense to switch over to January 1st of next year, just, if there's only a couple months left in a given year, and then start planning from that point onward. So you can sort of toggle back and forth between those two options as you see fit, depending on the time of year that it is. And then there is an additional option here for a current month setting. So sometimes we also call this the rolling 12 setting. And this one is a little bit different than those other two settings in that instead of starting on January 1st, this setting is going to start as close to the current month as possible. So it's actually going to start on the first day of the following month, depending on whatever month that it actually is in reality. So today being April 12th, for example, with this setting locked in place, our cash flows are actually going to start on May 1st of 2024. So year one, instead of being January 1st to January 1st, is instead going to be May 1st of 2024 through May 1st of 2025. So this can be a great option for you, especially if you're focused in a little bit more on a short-term projection. Maybe you're not doing planning for someone for 50 or 60 years, but maybe you have a younger client and you're really a little more focused on the next couple of years in particular. The current month option is a great way to get as close to the current date as possible with the cash flow projections. The one thing to keep in mind with the current month setting is that it can offset the cash flows in a little bit of a weird way, depending on how you have some of your data entry completed. So sometimes things might not line up as cleanly on a year-to-year basis if you have some goals that are maybe overlapping between years and things of that nature. So this option definitely has its use cases, and it can be really useful for those short-term projections like I mentioned. But you can always, of course, use the January 1st options as well if you want those really clean cash flows. Perfect. So that's going to be the main three settings that have a very significant impact on the cash flows. A lot of the settings on this page here will indirectly impact the cash flows one way or another. So if you aren't familiar, I definitely recommend taking some time to just look over this page and understand each of these settings. But for today, I just want to zero in on a few more settings that are a bit more cash flow specific. So starting with the include taxable savings in planned savings column. This is something that you'll find towards the bottom of this page on the right-hand side. And this is, if you're using modified cash flow based as your planning method, this is a visual change. If you'd rather see taxable savings occurring in the planned savings column rather than the net flows column, that's where this setting comes into play. So this one is really a matter of preference. If you'd prefer to see excess cash instead of being reflected on the far right here under net flows, if you'd rather see that under planned savings along with the rest of their savings, you are able to make that change. And then if I were to save this here and then refresh my cash flows, there aren't too many years in this plan where we have taxable savings occurring, but during that year of that primary home relocation, we can see that those taxable savings are now in the planned savings column rather than the net flows column. So that one's more of a personal preference, but it is there for you if you'd rather move that specific savings around. The next one I want to take a quick look at is the spend unsaved RMD/distribution setting. So this is another one that's specific to modified cash flow based. So if we're assuming that we're spending off our excess cash, here, let me switch back the withdrawal sequence here. If we're assuming that we're spending off our excess cash, but maybe we only want that to be the case for pre-retirement, and then for RMDs in particular, maybe we want to assume that those are going to be saved and reinvested automatically. You can uncheck this box. So instead of spending those unsaved RMDs, we're going to instead save those automatically. So if I make that change and then refresh the cash flows, in those RMD years now, instead of assuming that those are being spent off, we now see that those are being saved and automatically reinvested. Perfect. And then the very last setting that I want to take a look at today is another setting at the bottom of our page here, and that's specifically to allow the display of scenario-specific cash flows. So, in RightCapital, you do have the ability to utilize return scenarios to take a look at a client's plan in a different context, essentially using a different sequence of return. This is something that's available in the retirement analysis section. If you're taking a look at the comparisons tab, for example, you can toggle between different scenarios, either the defaults that RightCapital has built in, or if you've built out any of your own custom scenarios like I have here, you will also see those listed. But if you're ever finding yourself in a situation where you want to view the cash flow tables for one of those scenarios as a way to maybe inject some volatility into the cash flow analysis, that's where you can check this specific setting. So let me just toggle that on. And then if I refresh my page here, you will now see that there's an additional menu next to our plan selection, and that's our return scenario selection. So maybe you do want to see what a client's plan looks like, given a bad decade followed by slow growth, for example. You can plug that in here, and then instead of using that baseline projection, which is really just looking at your assumptions that you have entered for your different asset classes, we're now going to be using a different sequence of return, specifically this bad decade followed by slow growth here. So instead of very straight line growth, we now see a lot of up and down here in our portfolio return. So if you are finding yourself wanting to take a look at any of these scenarios in the cash flows, that's the setting for you. And I do just want to quickly touch on where you can build custom return scenarios if you find yourself ever wanting to do so. Back in your advisor portal, if you click into the Models tab, there is an area here for scenarios. And there are going to be a couple return scenarios built into all of your RightCapital accounts as a starting point for you. These first 4, bad decade all the way through flat 0% return. These are the default scenarios. So if you wanted to see what those ups and downs look like in terms of equity, fixed income, and cash, for any of those scenarios, you can find that here in the Models tab. But you can also add your own custom scenarios here. So I just have a couple very simple, custom scenarios here with flat % growth. But you can build these out however you'd like. You can set those up to mirror real life sequences of return, or just take a look at a very specific hypothetical, and then you're able to utilize those within your cash flows. So I do want to quickly mention that There is a webinar that we're going to be running next Friday that is dedicated to return scenarios. So if that particular setting and that particular feature is of interest to you, I definitely recommend tuning into next Friday's webinar on return scenarios. But I, of course, wanted to highlight how we can utilize those return scenarios in our cash flows in particular for today. Perfect. And then the very last thing that we're going to be taking a look at here today is going to be cash flow reports. So if you ever find yourself wanting to generate a cash flow report for a client, you do have the option in the cash flows to download cash flow tables as a spreadsheet file. So not a report per se, but I do always like to highlight that as a feature for you. If you ever find yourself wanting to export any of these tables into Excel or your spreadsheet software of choice, you can always click the blue download button on a particular cash flow table, and that will download that as a CSV file for you. So that is a handy feature if that's something you're looking for. But if you're looking to generate a more traditional report in particular with your cover page and disclosure, that's where we can click into the gear icon once again, and then go to this report section. So, generally speaking, if you were going to run a cash flow report for a client, you would just need to scroll down a little bit until we get to the retirement section and then check off the cash flows box here. But maybe you don't necessarily want to print every single cash flow table in that report. Maybe you want to be a little bit more specific and pick and choose which tables to include. You can click into this cash flows area, and that's going to pull up a window for you here where you can be more selective. So, maybe for example, you don't want every single table. Maybe we just want the main summary page. We want our, invested assets and net worth pages, and then maybe the ending balance by accounts. We can isolate those specific pages here. And then if I click done and then click download, we can take a look at what that report is going to look like. Perfect. So we can see here, we've got our cash flows for our proposed plan. We've got our summary page. We've also got our specific return scenario that I had dialed in selected here. So if you do have that setting checked to allow for scenario specific displays in your cash flows, you can run reports of those in particular. And then we have our summary page, our net worth page, our invested asset page, and then lastly, our ending balance by accounts page. Perfect. We did recently add a new feature to our cash flows that I want to make sure I highlight here. So I'm going to click back into the reports tab here. And this was a feature that we added a week or two ago, and this was a popular request for a long time. So I'm very excited to go over this with all of you here today. When it comes to cash flow reports, we can now compare multiple plans in a single report. So historically, whenever you would generate a cash flow report in RightCapital, it would always print off the cash flows for whatever plan you were last viewing. So for most of today, we've been viewing the proposed plan. So that's what we were seeing there in that cash flow report we just took a look at. But there's a new option here at the bottom of this window where we can select plans. So I currently only have the current and proposed plan here, but if you do have multiple proposed plans, you'll find all of those listed here. And you can select two or more to include in your cash flow report. So maybe we want to compare the cash flow summary between our current plan and our proposed plan here. We can select those individual plans, select our cash flow summary area here. And now if I rerun this report, we can take a look at that comparison all in one report. Perfect. So we've got our cash flows first for the current plan that are reflected here. We can take a look at the summary page there. And then if we scroll down to the next page, we have our same cash flow summary, but for the proposed plan. So if you were wanting to compare and contrast multiple cash flow reports as part of a single report in RightCapital, that new option is going to allow you to do so.